Hey, hello and good morning, everyone. Welcome to Easy Markets Daily Picture International with me, Darius. Today is the 4th of May, 2023, guys. So, welcome, everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear here from the bottom left corner, and then we can continue. Okay, so now then, let's get back to business. Also, before we jump into the charts, just a quick reminder of our Easy Markets website. You can always check out for more. You can always check it out for more information about us, which I believe you can find useful. So, now then, guys, let's jump into the charts. Nikkei 225, the first technical picture here. What can I say? We had a nice decline. Today Japan is closed, but this is what I'm looking at here are the futures. So yeah, we're still above this upside line, taken from the low of the 6th of April. So as long as we remain above it, and yes, I will, as I said before, I will stick to my upside scenario, guys. However, if we start breaking the upside line, because we already are falling below my highlighted territory right here, and if we also break the upside line and kind of remain below it, then yes, I am leaning a little bit more towards the downside. ASX 200, the Australian index, yes, we declined nicely. We fell below the level here, the one that I was talking about, this 7,217, and yes, we dropped below the 100-day EMA as well, and we reached the 200-day EMA, which was one of my targets because my initial target, my ideal target is this area between the 7,064 and 76 levels, and then we will kind of take it from there if we do reach that eventually. But at this point, yes, we nicely dropped below this, but my problem right now, let's say with further declines, is although I'm leaning towards further declines, but I would actually in this specific case with the ASX 200, I would actually prefer to see a drop below the 200-day EMA, and then we could go from there, guys. Now, in terms of the upside on this index, look, my ideal scenario is from around here. I get it. We could be missing out on a lot of territory here, but I think that maybe, let's say, we could start looking at some higher levels, maybe from somewhere around here, not like with a fat line like that. No. Let me just put back my colors and everything. So yeah. So basically from somewhere around here, the 7,278, if we do push back above this is the inside swing low of the 27th of April, then yes, potentially there could be a few more buyers joining in here. So, and then yeah, we could drag it all the way here. But again, this is a little bit more of a risky ride here. Probably the easier option is still to wait for a push above the 7,447 area, well, between these two levels, this area. And then yeah, this will confirm a forthcoming higher high, and potentially could attract a few more buyers into the game. Now, India's Nifty 50 index. So yeah, we did get a nice little retracement here, initially, and then yes, yesterday or today, should I say? Sorry, is this Friday? Yep. Okay, that's interesting. So yeah, yesterday. Okay, that's quite interesting. But anyway, we're pushing back to the upside a little bit, as you can see here. I'm wondering why it's Friday. Okay, we'll look into this. But we're pushing back up. So far, in a way, it's kind of working out because, again, what I said to you, that as long as we stay somewhere above this upside line, then yes, there is a chance for this one to move back to the upside. So far it's doing that because look, my downside scenario is actually from around here, not only from a break of this upside line, but also from a drop below this territory, which is, let's say, roughly between the is around the 17,900 zone here. So if we do drop below that area, then yes, I'll get a little bit more excited with the downside. Okay, so the US. All right. Okay. Yesterday, as you all know and you are aware, we did get some volatility, and the cause for that, of course, was the Fed. So, yeah. Yesterday, the Fed came out with some interesting kind of rhetoric, and the reason why I said that, in my title here, the Fed trying to please everyone, it seems like they came out saying that yes, they removed the word anticipated. I think this is what everybody's kind of talking about. The anticipation for further rate increases. Let me just word it correctly. From a statement that it anticipates further rate increases would be needed. So the word anticipates was removed, kind of indicating that yes, further rates are needed, and it doesn't think that way, but at the same time, it comes out, says that current inflation outlook does not support the case for rate cuts. So basically, this is what I said to you yesterday. That look, first of all, that they will raise rates by 25 basis points, and probably they will stick to that because again, 50 would be a little bit way too much given the current environment with all the mini banks and that side. And no rate hikes would be a problem because of the Friday's numbers. If let's say those come out much better than expected, then yes, I mean this could just push inflation further, and the Fed would then have to continue tightening. And I think that this way, I think the Fed was the kind of it played the safe card. But still, of course, the criticism will always pour in. I mean, we people cannot live without criticism, right? Or criticizing someone. So, and yeah, this, like I said, this is what we got. We got that 25 basis point, and then the Fed came out with, let's say, yes, they removed the word anticipated, but actually they don't see the inflation outlook still supports the rate increases. So. What's next? Basically, looking at the CME Fed Watch tool, you can see that now for the next meeting, the 14th, which will happen on the 14th of June, they're expecting no rate hikes. Again, that's still a long way to go because again, we had something similar back before, like after the previous meeting, not yesterday's meeting, but before that meeting. When it came out, then we had also like that there's not going to be any increases, but then it quickly shifted to to the increases side. So the same story is happening again, and of course the Fed also said that there will remain data dependent, which basically giving yourself a green card to continue raising rates. Now, personally, what do I think? Judging from yesterday's meeting, it seems like just maybe, there is an opportunity not to see any increases, let's say during next meeting. But I think that if they let's say don't increase anything during the next meeting. And then we'll start seeing inflation, spiraling again to the upside, and basically this is where they will kind of hit us hard with more increases going into closer to the end of the year. Now, again, this is only one theory, and this is only my theory, and look, don't stick to it because as many analysts there are, that's how many opinions you have. So it's a little bit, tricky. I want to see how it's going to play out. I mean, if eventually all the data will shift towards the point that we will have another increase during next meeting, that's fine. Then maybe there will be. I think that there will be 1 month or like one meeting or two meetings that will kind of give it a pause. from the increases, but then this is where I'm curious to see if it's actually going to be that we're going to get another increase. Let's say the data comes out much better, this inflation, jobs numbers come out much better than the forecast, and inflation then during this month comes out also let's say higher, then yes, they will go ahead and give us another 25 basis point increase. But if suddenly, let's say, data drops, employment data drops, inflation data drops a little bit, then yes, the 0% rate hike, zero basis point rate hike during next meeting could be possible. But again, let's say, like I said, that's where we'll have to shift our opinions all the time. And I'm saying this in the beginning because I want to come back to all this, what I will be saying, and before the next meeting, which will be when in June, mid-June. Yes, there we go. So now, what's next for the indices? Now, from the technical perspective, we have a range here on Nasdaq. We did drop lower below this 13,220 territory, my beloved level, which I keep on monitoring very carefully. And we fell below it, and we're drifting. It seems like we're drifting a little bit lower. To be honest, I'm kind of leaning a little bit more to the downside. However, as I said before, I don't like ranges, and that's why I will stick to the exit for out of this range before, let's say, considering the next short-term directional move. And once I get that, then yes, I will get a little bit more excited with either the upside or the downside. So if I get a clearance of the 13,350 territory, yes, I'll get a little bit more excited with the upside. If I do see a drop below the 12,950, then yes, I'll get a little bit more excited with the downside, because at the same time, we could drop below the 50-day EMA here on Nasdaq 100. Now, S&P 500. So, yes, still in a beautiful range. Yep, as you can see here, we did fall below the 50, but EMA. But we found good support near this highlighted zone of mine. And I talked a lot about this, and I said that I need to see a nice, good clearance, and I need to see the body of the daily candle staying below this in order to go further south. What am I getting? I'm just getting some tests, and I'm not really getting some clear breakouts. So for now, I would say that yes, I'm going to be playing the waiting game on this one. And look, if it starts moving somewhere around here, congratulations. If you're a range trader, this could be something for you. But if you don't like that, then yes, stick with me and wait for a clearance of one of these sides here before examining the next short-term directional move, guys. Now, jumping into the German index, DAX. Okay, look, the German index. Of course, we do have the ECB today. So it's, as I've mentioned in my heading there, that yeah, it's ECB's turn now to do something. And well, with that one, I think is going to be just cold, straightforward solution that, yes, they will just go ahead, raise rates, and yeah, by 25 basis points from 3.5 to 3.75, and then we'll go from there, So now, if the actual number comes out higher as at 4, well, guess what? What could happen with DAX, ladies and gentlemen? That could fall off the cliff, and we could see a nice move here to the downside. Look, for now, I'm looking at this. I mean, you can see that we are stuck in this little range right here. This one right there, between the 15,800 and the 16,063 levels, approximately around there, or actually maybe you want to say 100. So whatever, guys. I mean, we're just stuck in a range. We're not really doing much. So if you want to go lower, look, I said it before, I will say it again. Yes, I will start looking at some lower levels if we do drop below the 15,800 zone. But if we start falling below this 15,700 territory, at the same time, we might also drop below the 50-day EMA, and potentially more sellers could join in. Now, for the upside, I need to see a nice good push here through this barrier, through the 16,063 territory. I need to see the the body of the daily candle staying above there, above that area, and then yes, we could take it from there, guys. So just keep an eye on that one. So yes, as I said, the ECB today is coming out, so just be careful. Check out the economic calendar to see when it's coming out at your place, wherever you are. But yeah, be very careful. Now, so of course, the dollar didn't like yesterday's rhetoric because again, yes, we did get a interest rate hike, but the fact that the wording came out saying that, oh, we're remove the word anticipation, and this is what didn't really sparkle well with the dollar bulls. And you can see that yes, we drifted lower. We broke the upside line, the one that I had here on my chart, and still have, and we stayed below it. So this means that I'm kind of leaning a little bit more towards the downside, to be honest, as long as we stay below this upside line. If we start pushing back inside here, I will have to kind of redraw here everything and just kind of maybe or take a pause or something like that, because again, look, my upside scenario is from around here, from around this 102 territory. If we do push above it, great, I will get excited with the upside. If we stay, as I said, if we stay below this upside line, then yes, I'm leaning towards the downside. All this area right here is somewhat of a neutral one for me. Okay, so now then, gold. Oh my God, look at gold. There we go. We reached my target. Look, yesterday I talked about this and I said that, hey, if we do correct a little bit lower, but we stay somewhere above this upper side of the triangle pattern, then yes, I'm gonna lean towards the upside, especially if it also pushes above the 2020 territory, somewhere around here. I mean, talk about a push. This already started pushing higher before the meeting, because yesterday we did get also some data, if you missed that one. So yesterday from the US, let me just open that one up. So yesterday from the US, we also got the ISM non-manufacturing PMI numbers, which came out much better. Services PMIs declined a little bit, not much, but just a fraction, but still came out better than the previous. And what else? Oh, yes, of course. ADP non-farm employment change. That was, I think, the highest since for quite a while, actually. I think, yep. Let me just double check. Yeah, this was has been the highest since August of last year. So now then, of course, this kind of gave this positivity, and it's kind of giving that positivity that the job number itself could be on the higher side. But although people do like to look at the correlation between ADP and NFP, I would still stick to the idea that, it's not always correlated. And whenever it's very obvious, it's too good to be true. So just probably keep a cold head on your shoulders and, then do something about it. I mean, once the number comes out, then, let's do something about it. But before that, look, it's a little bit of a tricky one. I mean, if you can afford to gamble, great, do it, but only risk what you can afford to lose. That's very important. I mean, and have your stop losses in place just in case, it goes against you, so that you wouldn't lose too much or something like that. So, but in general, I tell people kind of not to, and just, this is probably what I'm going to stick to. I'm going to say, don't. First of all, just let's wait for the number to come out, and then we can do something about it. For now, I will just observe the price action, and yes, I'll keep an eye on the data, and once it's out, then we can do something about it. But at this point, look, gold. I mean, this spiked higher, and on my chart here, I have the futures have reached the 2081 level here. So look, previously I talked about this downside line, if you remember, and let me just jump into weekly. So you can see that we kind of pierced it, but in general, look, whatever you have, one thing for sure, we reached the downside line. the downside line, which was taken from the highest point of August of 2020, guys. Yes, the question now is, can we go higher? Well, we are having that third test. Let's see what's going to happen today. For now, yes, I'm leaning still a little bit more towards the upside because I want to see if we can get a retest of this 2049 level. Because look, this spike kind of happened overnight and during the Asian session. And yes, let's see if something like that, if gold can maintain the high status, let's say during the European and the US sessions. If it can, I mean, wow, this could be a new norm set for gold. Let's say, you know, if we previously looked at historic numbers here, like, you know, when we were around here, 1,500, and we were kind of bouncing around previously here, so back in 2019, you know, it was kind of really, let's say, radical to see that, hey, 2000, I mean, wow, that would be, you know, that would mean a collapse or whatever, you know. We'll reach that, and then we kind of go back down. We start, you know, kind of moving around a little bit here. And we once again, we reached that 2000 and we're sitting above that 2000 mark. So I think that people are adjusting. And my question is, will we go higher on this one? Well, in general, I'm kind of... I would say I'm kind of leaning a little bit more towards the upside, because if I do draw this and I apply the Fibonacci extension on something around these lines, then you will see that the 61.8% extension on the Fibonacci, or should I say the 61.8% on the Fibonacci extension is somewhere around here. Let me just put this one. Yep. 2,180 zone, up roughly around here, guys. But again, for that, we need to see a clearance of this downside line. If we don't see that, then yes, no higher levels. But if we see that, then that's where it could become a little bit more interesting, guys, a little bit more exciting for the buyers and for the bulls, yes, and then we could kind of go from there. But at this point, look, we're seeing a nice little retracement at this point while I'm talking, and this is okay, this is normal. But let me just kind of remove this Fibonacci extension here. Yeah, this is okay, this is normal. So, but let's see if we can actually maybe get a hold of somewhere near this area, the 2032. If that provides good support, yes, I will aim for the upside again. I'll aim for the 2048, 49 territory initially, and then I will take it from there, guys. For now, long story short, yes, we had a spike, a major spike, but I think that we could revisit some of these higher levels. But the question is when. So for now, we're seeing a retracement. So that's why I am taking a cautious approach and just keeping an eye on this little hurdle here, the 2032. If we stay above it, I will continue aiming to the upside. If we stay somewhere above it, not exactly, for example, hitting that level and then rebounding. No, if we stay just somewhere above that area, then yes, I will continue targeting the upside. Now, some of you might say, hey, but what about, let's say, if we try to apply the Fibonacci here? You could. It's possible, maybe something around these lines. But yeah, we're currently sitting at around the 38.2%. So if we do fall below it, then it's that 2032 level, which could in a way provide that support. But again, a lot of ifs right now. So I'm trying to take it I'm trying not to overcomplicate life, and I'm trying to keep it short and simple. For now, yes, as I said, as long as we stay above the 2032 territory, I will aim for the upside. Now, jumping into silver. Silver is a little bit on the modest side, but in general, look, so far so good. I'm not going to spend too much time on this one. Everything's working out nicely. We pushed above this highlighted zone of mine. I talked about this to 25.3949 levels. And yes, we stayed above it, so I'm going to continue targeting the upside. My next target is the 26.09, and then I'll take it from there. Oil. Look at this. Look at this. Everything's kind of working out. Honestly, look, I mean, I kept on talking about this one, and it seems like my targets get reached, but with kind of overextension. I mean, look, I targeted initially the psychological 70 territory. I mean, talk about a touch. It touched it, and then kind of did another 3 times the same distance, you know. So we ended up actually falling not only to the target of mine here, the 66.12, the other one, not only clearing the lowest point of March near the 64.37, we actually kind of pierced through it, and jumped jumped back to the upside. Now, look, what I really want to do here is, first of all, remove all the drawings and have a fresh look at this, because first thing I want to say that we are below all of the EMAs. Okay, we're well below all of the EMAs, so maybe a bit of a retracement at some point here could be possible. Now, I need to kind of mark this. I mean, the lowest point of March, we violated. We tested the area around the 63.66, approximately around here, guys. Maybe on your chart it's a little bit different, but also at the same time, we are below this downside line, which I mentioned previously. So for now, it's okay. Yes, the trend is to the downside. So if you're looking for some higher levels, maybe we could look into this, a break of this downside line, and then yes, we could start maybe targeting some higher levels. Now, if you want to maybe have a level here, maybe this 74 territory could be ideal to watch, something around these lines. So the 74 territory, yeah, could be that gateway to some higher levels. And again, depending on how we're going to trade, maybe the 50-day EMA could approach this area as well. And then maybe, you know, a nice good break here of this territory could lead to some higher levels. So something like this might be possible. But again, for that, we need to wait a little. For the downside, now further downside, I would say, look, there is still hope for the bears that, you know, we could see a bit of a further decline. What I'm going to do here, I'm going to mark this little territory, the 69 zone. And if we do stay below this, we're currently below it, and if we do continue to trade below it, I will lean towards the downside. My next target is around here, the 66.83. And then we'll take it from there. Like I said, I removed the previous levels. I want to keep everything a little bit more current. So if you want to go further south for now, yes, I am keeping an eye on this this idea of mine. The 69 level, if we stay below it, I'm going to aim for the 66.83, and then we'll take it from there. All this area right here, could be a little bit of a neutral one, and might be no man's game here. So just I'm going to leave it there and just observe the price action. Now, jumping into Bitcoin very quickly, guys. Bitcoin is a bit of a, it found good support near the 50 EMA. So on the positive side, the fact that it's holding above the all the EMAs, then that's great. Yes, we're also holding above this upside line as well. But what I said to you previously this week, that look, maybe this is it's forming a head and shoulders pattern, and maybe it's a complex one with two left shoulders, one head, and the two right shoulders. Again, it's too difficult to say for now. Probably the easier option to stick to that idea if we see a break of this upside line, which could be the neckline. Also, to support maybe the downside scenario, we could keep an eye on this one right here, this downside line. So as long as we stay below it, yes, we could see another decline here. But if we start breaking the downside line and we push above that psychological 30,000 mark, guys, I am leaning a little bit more towards the upside. Litecoin, this one is a little bit tricky. It's kind of continuing to oscillate around the my EMAs here on the daily chart. So this doesn't really help me in any way, but for sure, it's giving me kind of support to my idea that I'm going to wait for a clear breakout through one of my areas. And if I do get a clearance of this territory here, this 94 zone, then yes, I will get a little bit more excited with the upside. For the downside, I need to see a drop below the 0.32, something around those lines, or maybe the 84 level itself. At the same time, we could see a drop below the 200-day EMA, potentially attracting a few more sellers into the game. Dogecoin, very quickly on that one. This one's kind of ranging. I mean, it's waiting for the next Elon Musk tweet or something like that. But yeah. Yeah, so for now, like I said, yeah, we're just observing the price action, but it could be quite a nice one if we do break the downside line here. And if we do get that break, then yes, great, more buyers could join in. We could see, you know, a push if we do break this downside line, because we more buyers could join in because of the also a push above all of the EMAs on my daily chart here. This could be seen as a positive, and yes, we could see some upside moves here. Now for the downside, the drop below the 0.0766 territory, somewhere around here, could do the trick for a few more sellers. Now my arrow is pointing all the way towards the 0.0626, but actually I'm going to aim initially for the 0.07 territory initially, and then we'll take it from there. Now let's jump into a few pairs very quickly, guys. AUDNZD. Look, one of my favorite pairs. We're seeing a bit of a decline. So look, we're struggling with these trend lines. So we're stuck in between them. Let me just change this one to the same color. So we're stuck in between these two trend lines. So for now, yes, I'm observing just the price action. But once we start clearing one of them, then that's where it could become a little bit more interesting for any of the sides here, because look, if we are looking for some buying action, probably the easier option is to wait for a break of this downside line. For the downside, a break of this upside line could be useful. Now from the very, very short term perspective, look, I have my arrow here, so 1.0683 territory is something that I'm keeping a close eye on. So if we do fall below it, I will aim for this upside line taken from the low of the 18th of December. And this could provide that support. If this could provide support, we could see a nice rebound push back up. Now, and this is the point where if we do break the upside line, then that's where, yes, more sellers could join in, and we could see a nice good drift lower here, especially to the 1.0588 zone right here, marked by the lowest point of April. If that gets cleared, this will confirm a forthcoming lower low. AUDJPY, very quickly on that one. So look, here I would say it's a little bit of a mess. So yesterday I talked about this and I said that if we stay above this downside line right here, then yes, I will go higher. I will go back to the upside, but we broke the the downside line. And also what I said, that from the shorter term perspective, if we fall below the 100-day EMA, my next target is the 50, the 89.42 territory, and then we'll go from there. Maybe if we clear it, we could go towards this upside line. Well, as you can see here, we tested a few of my levels here. We didn't really go all the way towards this upside line, but that's okay. We still have time. And if we continue to trade below the 50-day EMA right now, where we are currently, then yes, I'm leaning towards the downside, because this could be seen as a bearish indication, where we could then start targeting this upside line. For the upside, what I need here is, well, actually, I'm going to take a very conservative approach, and I would like to see a push back above this hurdle, back above this 90.78 territory. And yes, if we do clear that one, then we could also clear all of the EMAs on my daily chart, and this could be seen as a nice positive. AUDCAD. So this one's actually the most, it's actually competing now with my favoritism, because my favoritism is on the AUDNZD. But actually AUDCAD is kind of becoming that quite interesting technical pair, which does a lot of things by the books, so which I really, really like. And look, for now, it broke the downside line. Okay, that's great. It's currently finding resistance near these EMAs, which is fine as well. And also it's finding resistance near the 0.91 territory. So In order to go higher, I would like to see a nice good push above that area, above that 0.91 zone, and I would like to see the body of the daily candle staying above it. If we do get that, then yes, great, more buyers could join in. But for the downside, all this area, if it declines, if it, let's say, starts sliding alongside this downside line, no, that's not going to work for me. What I need here is a drop below 0.8958. This would confirm a forthcoming lower low and potentially could attract a few more sellers into the game. USDJPY, very quickly on that one, guys. So look, this one is declining. So yep, correcting nicely to the EMAs here on my daily chart. So now the question is, can we see a rebound from this area? Well, that's a good question, of course. And look, we have also this upside line taken from the low of the 24th of March. Now it's a little bit on the tentative side, but nevertheless an upside line. So what can we expect from here? Let's say even if it declines, I'm going to be very curious to see if we can actually get a hold up somewhere around here and maybe a bit of a rebound. Now, for today, I think that yes, we will probably continue sliding, but going into Friday, maybe good job numbers could support the the dollar here, and we could see a nice rebound and a push higher, push back to the upside. So just kind of don't be surprised if you see like, let's say today a slide, but tomorrow maybe the buying interest would kick in and drive this one back to the upside. On a weekly candle, you can see a full kind of a sharp decline here. Look, we're near this upside line, and I think I'm putting a little bit more emphasis on it, because we also have other EMAs here, so maybe all of them could provide that good support. So yes, a bit more declines here could be possible, but if this holds, if this provides good support, maybe going into tomorrow, we could see a nice rebound. But let's wait and see. If we break the upside line, guys, ignore any rebound, and let's start shifting our attention to some lower levels. By the way, USDJPY, look, one other thing that I wanted to point out is that, let's say, if we break the upside line and we drift all the way towards this territory right here, the 133 zone, somewhere around here, maybe this could be forming something of a head and shoulders pattern. But to be honest, I think that for now the head and shoulders is with a slightly tilted neckline. So yeah, if we do drop lower here, let's say we break this first the thinner upside line, we go lower, test the slightly fatter one, rebound from it, push back up, and then start forming the right shoulder. Yeah, could be the case, but that's a little bit maybe, me thinking that I have a crystal ball and, trying to foresee the future too much. But look, for now, like I said, I'm keeping an eye on this territory. I want to see if we can get a rebound or not. USDCAD, beautiful moves here. Yeah, great. Look, can't say anything else that so far so good. I talked about this and I said that I need to see a clear break through this downside line in order to get a little bit more excited with the upside. So if we break the downside line, yes, I'll go higher. If we do drop below the 1.3537, then yes, this is where a few more sellers could join in, and we could see, some sellers getting attracted here, because all this area right here just could be part of this little range where we're currently sitting in. Excuse me. Sorry, I had this. Something got stuck in my throat. But this little territory right here, it's, like I said, it could be part of a range. And if you like ranges, then yes, maybe this could be for you. But if you don't, just kind of wait this one out. Wait until we get a clear breakthrough one of these sides that I've highlighted here from where my arrows start. So for the upside, I'm still keeping an eye on that 1.3630 territory. For the downside, somewhere around the 1.3540, maybe 35 level, something like that. That could be an interesting area to watch. Now, US dollar against the Mexican peso. I talked about this yesterday, and look at this. we broke that 17, 18, or 90 territory I spoke about recently, and we fell below it, but we failed to stay below it. Now we just got a tease, and this is where, like I said, this is where my kind of idea comes in, like where I talked about USDJPY. I want to see if this is going to hold. If it's going to hold, maybe we could see a bit of a reversal in the dollar. Maybe the bulls could kick in and, you know, drag this one a little bit back to the upside. But even though my upside scenario is from around here, from around this 18.20 territory, 18.20 territory. At the same time, we could break the 50-day EMA and potentially could open the door towards that 100 or maybe the 200-day EMA. And then we will take it from there. But at this point, yes, of course, I'm cautiously bearish, but I need that body of the daily candle staying below it. If I get that, I will get a little bit more excited with further declines. GBPJPY, looking good, still declining, still going lower. Yes, we are correcting nicely to the downside. This upside line is something that I'm keeping a close eye on. Yesterday, I've drawn the Fibonacci's here, said to that if we do fall below the 38.2 here, my next target is the 169.30 zone. If we clear that one, then it's the 50 and so on. Basically, what I'm doing, I'm going gradually to the downside. So for now, I can see that we are falling below the 50% retracement here on the Fibonacci. If we stay below it, my next target is the 61.8. Simple as that. That's roughly around that 168 territory. I want to see if it's going to provide any support. If it does, great, we could see a rebound. But if we start shifting back above the 38.2, then yes, I will get a little bit more excited with the upside, guys. For the downside, I need to see a break of this upside line, and then I'll go from there. Euro against the Norwegian krone. Look, I haven't looked at this one for quite a while, and previously I've mentioned this because, look, I said that if we clear this territory and we stay above it, then yes, this increases the chances for a further move higher. Well, we got that. So we got that move, and that's great. So, but we managed to reach my target, the 11.70 territory. That's great. Now what's next? We can see that we overshot that a little bit, so I think I need to remove all the drawings and kind of start fresh. So first of all, we can see that where we are right now at. We managed to bypass this little target right here, the 11.69 zone, approximately around here, guys, or actually, let me just try to capture this one. Yep, the 16 or the 11.70 actually. We managed to surpass that one. We managed to stay above it. Now, of course, the all-time high is somewhere around here, near the 13.20 zone. This is what we got during the kind of the beginning of COVID times, and yes. Now we're slowly getting there, and it seemed because oil declined heavily, and we know that the Norwegian krone is Norwegian economy is heavily dependent on oil, and yes, we saw oil declining heavily, and that's why we had EURNOK pushing strongly to the upside. We saw Norwegian krone devaluating heavily. So now we're seeing oil as well declining. So once you see oil reversing back to the upside, we could see EURNOK drifting lower here. For now, it's one-way traffic. It's only to the upside. We can start drawing some upside lines right here. But the question is, can they work? Will they work? Well, for now, again, no one knows, but let's say, like I said, we can only look at some steeper upside lines here, and we could keep an eye on them. But if we do break one of them and we fall below the 50-day EMA, I will get a little bit more excited with the downside, guys. Now, and Euro Aussie, guys. Euro Aussie, yesterday I talked about this, and I said to you that if we break the downside line and then stay above it, then yes, I will go higher. And so far, I'm going to stick to my game plan, but I think that this time I'll take a bit of a conservative approach here. Yes, I'm still leaning towards the upside, but I actually am going to monitor this little hurdle. this little barrier, the 1.6667. If we do pop above it, I'll go further north. My next target then is this one, the current highest, or not the current, but the highest point of April, near the 1.6787, and then I'll take it from there. For the downside, this is where I'm going to reuse these lines here. For the downside, I would actually prefer to see a drop all the way back below all of these trend lines, and then maybe an additional drop below the 1.6356 could be ideal. Anything around here, look, from the shorter term perspective, maybe this could play out. So the 1.65 territory, if we do fall below it, then yes, I'll slowly start aiming to the downside here. Maybe something like this could be possible, but at this point, guys, just yeah, I'm leaning a little bit more towards the upside. So let's see if we can get that. EURGBP, haven't looked at this one for quite a while, but look, I removed some trend lines because it was getting a mess. It was getting messy. And now I'm going to keep an eye on this little range. We're currently stuck in it. Some of you might say, hey, but maybe it's not a range. Maybe it's actually a nice ascending triangle pattern. Well, you could be right as well. Because again, this, for now, look, if we do break the lower side of the ascending triangle, then we're keeping an eye on this range. So straight away, I'm looking at this range. So look, if you think that this could help you to support the upside scenario, I would say no, because what could help you support the upside scenario is we push above the 0.8866 territory right here. Then yes, and especially if we stay above it, if we do that, then yes, more buyers could join in. We could start maybe targeting the levels around here, like the 0.8925 or even above that, but initially we'll aim for this one. For the downside, yes, a break of this upside line may attract a few more sellers, because we could see a drive towards the lower side of the range, especially if we do fall below the 200-day EMA right here, and then we could be placed below all of our EMAs, and then yes, more sellers could join in. So just keep that in mind. The 0.8760 territory is also something to keep an eye on. Maybe it could be aligned together with the 200-day EMA, and this could potentially help us out in terms of targeting lower levels. And finally, EURUSD, guys. So, of course, yes, testing the upper side, because, of course, the dollar is declining, and we see EURUSD pushing nicely to the upside, but it is struggling with that upper side of the range, that one that I kept on talking about. This range is roughly between the 1.0964 and the 1.1076, something around those lines, kind of. But in general, it's in this little range. So the question is, can we see a further move above the upper side of this range? Well, one thing for sure, you have to keep an eye on the ECB today. Look, for now, the expectation is for a 25 basis point increase. So in a way, I think that the market is already kind of pricing that in. But if suddenly, let's say, we get some sort of interesting wording from the ECB, from Christine Lagarde, then yeah, maybe this could change the outlook a little bit. Look, we have the press conference coming out later on. Let me just, I think it's half an hour later or 45 minutes later. Let me just quickly double check that. So yeah, that's oh wait. Oh no, it's about 2 hours later. Is that correct? Let me just check another economic calendar. Is this for real? It's Thursday. Today's Thursday. Yep, ECB interest rate decision. And yeah, no, it's only half an hour later. So yes, one of my economic calendars is lying. So it's half an hour later. So yeah, I knew it couldn't be like that, but yeah, look, the press conference is going to be half an hour later, so yes, keep an eye on that one as well. So it's a similar kind of story as with the Fed. So first you have the decision, and then after, after half an hour, we'll get that press conference. So, we could see some volatility, increased volatility, so just kind of be careful with that one. If you are trading this pair, but yeah, always have your stop losses in place, guys. Only risk what you can afford to lose. Otherwise, it's gambling. So, you know, try to keep your cool head on it. And if it's not going well, for example, just leave it. There's always tomorrow, because again, the market will always present itself with nice opportunities. So yeah, for now, like I said, that's the game plan for me on Euro USD. For the downside, I'm looking at this 1.0964. Yes, all this territory here could be an interesting one, but I think that yeah, look, let's wait and see. Let's keep it, you know, simple. If we do fall, for example, somewhere below this 1.1035, maybe this could open the door to some lower levels, but then, hey, who knows, maybe, you know, you'll find support somewhere around here, maybe near this 1.1014 level, and then we'll go from there. So yeah, just keep an eye on that. So guys, that's it for this session. Look, I tried to be quick. I tried not to stall anywhere, but hopefully you found useful. Really appreciate your time, guys, your views, your rocket ships, yep, your comments in general, everything. I do like that. Thank you very much for that. And yes, I hope you'll have a fantastic trading day today, guys. Stay safe. Join me tomorrow morning, 6 o'clock GMT time, for another session. And yeah, we'll have a look at some of these instruments, some new ones, and then we'll go from there. So thank you very much. Have a beautiful day, and I'll see you tomorrow. Bye-bye. If you want to continue to please the trading gods, subscribe to our channel for a blessing.